Good morning, everyone. Welcome to the On Time On Target Morning Brief for Invested Fighter Pot Precision on a daily basis. We are going to talk about the Monday morning that the market is having for sure, right? And this one seems particularly ugly. So we're going to talk about some of the themes that are out there. And of course, we're going to put it in relation to the big picture of where we are in the market, and that'll help you see it's not quite as ugly as it seems. But I mean, there's just a lot of negativity in the air today. What happened over the weekend, obviously in China, you've probably been hearing some the news stories out of there. Evergrande, big real estate firm, probably going under 300 million plus in debt. One of the richest folks over there owned that thing, and kind of it seems like kind of kept that a secret. So that's a little bit of a surprise. So anyhow, if you think back to our housing collapse, if you will, back in 2007, 2009, you can think of, how did that housing market parlay over into other things, financially. Right now, I'm not so worried here in the U.S. because we put a lot of things in place to avoid that happening again. So we're a lot stronger system. China, to my knowledge, has not gone through that pain, if you will, that we did of the 2007 to 2009. So that's why I'm not so sure it's going to be. I think there's going to be a lot of carnage over there, if you will. So you have China out there. Biden, a lot of negativity in the polls lately. Maybe that's not more so than most, but it kind of seems like it is more of a divisive situation as the longer he's in office, kind of thing. So we'll see. I do think that's weighing on the market a little bit because we're breaking out into tax reform, right? And of course, when things get ugly, when you have these big bills on hand. Let me get that turned off for you. But you have these situations where they just kind of get uglier and uglier. That's going to weigh on the market. And then also you have the specter of inflation out there that people are starting to feel. And then we have a Fed meeting this week. It starts off tomorrow. And again, Wednesday at 2 p.m. Eastern, 1 o'clock here in the Texas area is when they actually have the announcement. And of course, the markets will be holding their breath prior to that. And the expectation is nothing changes. But you kind of need to wait and hear the Fed boss say, hey, nothing's changed before everybody stops freaking out. But yeah, this is absolutely not the right time to try to increase interest rates or really do any aggressive bond buying or selling, if you will, to try to unwind things. So it's really not the time for action. So I don't expect anything to happen, but the market's going to probably sell off into the meeting on Wednesday would be my take. So a lot of things weighing on the market. Is this buy the dip moment? That's what we're going to talk about today. As far as the topic, it's going to be the circuit breakers that are in the market in case the market does roll over. Remember, they're built in at the 7, 13, and 20 level, the different levels. So that's the overall market. Also, individual stocks have levels that they can hit. So we're going to talk about the circuit breaker system, when it came about, how it was adjusted over time, and then how it affects your portfolio in action. We saw some of that back in the March of 2020. As far as the longs today, only have one. It's Synologic. It's a medical firm. They have a blood disorder treatment that evidently is working, so they're gapping higher. So we'll take a look at them at the open. And then short, Li Automotive, not only in China, is having China issues causing almost everything to sell off. Bitcoin, not causing Bitcoin, but cryptocurrencies are also off. It's just kind of this all around selling sort of day. But Li also changed their outlook. Li Automotive also changed their outlook and guided down. So that's a bad thing. And then CLF, Cliffs Resources, tied to what's going on with the Evergrande collapse. They're going to be caught up on that. It seems is the initial worry. So that's a short we have out there as well that we'll take a look at. If you're catching us on replay, make sure you hit subscribe and notification bell to get these live to your phone or tablet. And if you want to join us live, it's $25 a month to come into the room. There's a Q&A window and a chat window for you to ask me questions real time. So please do. And with that, let's go ahead and get started. All right, here's our lineup card for the day. Make sure you check out the disclaimer. This is a financial education presentation. You have to do your own due diligence for acting upon anything you hear in this presentation. Full disclaimer information is available at ototnow.com. All right, let's make this window a little bit bigger here. You can see it. All right, the There, make that bigger. All right. Mission objectives: capital appreciation, capital preservation, and income generation. Today, it's more of the how to protect our money from the sell-off. Is it going to continue, and what moves do we need to make? And is it time to buy the dip? That's what everybody's going to say all day, is it's time to buy the dip. I would say not necessarily. I would wait for a couple of days. I think we might get a better entry point Wednesday, but I don't think the market continues down all week, and I'll show you why here in a second. All right, we're not going to talk about closed-end funds. We're going to talk about circuit breakers in the market. As far as our flow, long, short, open, short, long, we do a market review, do a headline review. You'll see the market review around the world. Markets are in the red. Pretty ugly morning, if you will. And the China and Japan markets are closed, but the Hong Kong market is big in the red. And actually, it was the Hong Kong market that the bottom fell out of on Black Monday back in 1987. I was reading about that this morning a little bit. It started in the Hong Kong market. So I thought that was kind of interesting. All right, so we're going to take the long-term investments of the Qs, the SPY. We'll get in the short-term execution again, one long, two shorts. I would anticipate the shorts will probably be the better play this morning with as much negativity that's out there. And contingencies and academic resources are standard. All right, let's take a look at some of these around the world numbers from this morning. So here's where we are for the US. So yes, down a couple of percent, right? Something to keep an eye on today. We'll see how things go. It was worse earlier. Here's Europe. So down here, red across the board for 2% basically. Banks slide 4%. So that gets back into the how healthy is your financial system. I would say the US is rock solid, and that's because it wasn't, in 2007 and 2009. Same levels of leverage are not available as far as, if you've tried to get a refinance loan, you got to fill out like 50 pages worth of stuff, right? They're checking everything. So this was, we went from checking nothing to checking everything. So I don't worry about that here in the US. Any sell-off in the banks, you can go ahead and buy them here. But I think it will hit the international stocks. And if you have international exposure, you could be looking at a decent sell-off here. All right. Over in Asia, it looks like this is Japan and China. That is from 9/17. Those are Friday's numbers. So I would grade those out if I was in charge of this website. But anyhow, this is the one that's open. Hong Kong down over 3%. So yikes, right? All right, what's going on in the bond world? 1.32 hardly changed. Oil down to 70. Actually, it was almost 75 earlier. Gold and silver unchanged. And then crypto taking a big hit this morning. They were down 10% basically across the board. Looks like they bounced a little bit from that. If you're in crypto, if you're a crypto trader, then execute whatever your pattern is and stick to that like, a disciplined monk, honestly. If you are a Bitcoin investor or a crypto investor, meaning you believe in the long-term thesis, then you have to have that same monk-like discipline in holding on to it. So if anything, you see big red numbers like this and you're like, ooh, could I add some more here? And then you're thinking right as a long-term investor. If you don't believe in the thesis anymore, you have to sell. But if you believe the thesis, the price that fluctuates, it doesn't matter, right? Because you're going to hold it for years. So, all right, more on that later. We might do some crypto stuff this week. We haven't talked to crypto in a while. All right, headlines. Let's take a look here. There's some analyst calls. None of them are going to make a difference today. It's the big sell-off is driving the market down. Here's an interesting. Morgan Stanley says looking more likely stocks fall 20% in destructive outcome for bull run. Well, it's kind of funny. That's a stupid sentence, right? Because in order for a bull run to end, it has to drop 20%, i.e. from the all-time high, which is i.e. The accepted definition of bear market. So it's not really a destructive outcome. It would be the lightest outcome would be 20. Past that would be even worse, right? So any dumb headline there. Chinese chip stocks, 50% upside. I do think we will make a killing in China after we're done, bleeding out, but we won't bleed out together. We won't bleed out a lot. But obviously if you have BABA or KWEB, I plan on holding that. If you don't like it, call me and I'll sell it. But otherwise, if it's up to me, we're holding through. All right. Domino effect on China. Yeah, I think there's going to be some real estate fallout in China. I don't have any known exposure to that. Might have some indirect exposure through KWEB, technology. Maybe they're Chinese Zillows on that or something. But None, no direct. All right, I don't see anything in here. Oh, this is interesting. So ETFs are very tax efficient. They can buy and sell with an exchange of stocks and blah, blah, blah. We can get into that another day. But there's been talk, mutual funds can't do that. And that's why index funds, that's another reason why index funds are the way to go if you're going to pool your money. And so, but the tax break that they have is pretty phenomenal. And the fact they can buy and sell and match and all that, and they do it every 15 seconds or so, computer does it. But the tax benefits that are huge, and obviously that would change things if they weren't. So, and they probably have it. Honestly, would increase the expense ratio because they'd have to hire people to sort through all the taxes of this buying and selling. All right, let's look at the market real quick. One thing I skipped was TD Ameritrade, so I wanted to show you that real quick. There's our day trading stuff. We'll go back to that, but here's the long-term market. So, anytime you wake up, especially to a punch in the face, kind of like this, you have to look at this chart and go zoom out and go, okay, how's 2021 doing? We're 9 months deep. You look at this chart and it's like, gosh, we've done pretty well all year long. So selling here would be normal. It'd just be a normal market move. Could have happened in July, could have happened here. Markets don't go up forever, and that's okay. But when you look, a lot of red candlesticks, it's what 7 of the last 9 days now have been down, and today almost assuredly will be a down day. When you leave there and you come back to the FinViz chart, you can actually see, this is the key, is what you look for here is sometimes you can't get it from the chart and you try to do the math and you're like, okay, is it 380 now it's 73? That how many percent is that? Is like, okay, stop, right? So down here you have a 52-week high, how far you are off of the 52-week high. We are 2.34%. Now, this doesn't count to this morning stuff. So literally you tack on 2 to that, we're around, excuse me, 4%-ish down from all-time highs. So when you say 4% from down from all-time highs, that doesn't sound that bad, right? But you wake up to this huge sell-off you're having this morning and there's all negativity in the air, it does sound bad. So when you look at the Qs, that's the NASDAQ. When you look at the S&P 500, index version of that is the SPY, and you go, okay, well, how far is that one? 2.79, so maybe a little bit more. The other one was 2.34. I think tech holds up a little bit better in the sell-off, this particular sell-off. But anyhow, just realize we're around that 4.5% from all-time highs. So all is not lost. So don't rush to sell everything, but there are concerns in the air. All right, need to roll into the market open. So let's get all set up for that, and I'll be back with you in a second. All right, good morning, everyone. Welcome to the On Time, On Target play of the day. This is TD Ameritrade Think Pipes in front of you, and we've got 4 screens in front of you. These are day trading screens. About 10 seconds, the opening bell. These are all 1-minute charts. We have the S&P 500. You can see we're bouncing off of the absolute lows this morning. Then we have our long SYBX and then 2 shorts, Lee and CLF. There is the opening bell. So we'll zoom in on this. Again, the momentum is down this morning. So I'm looking at the shorts a little more so than I am the longs. And I'm looking for something that backs up and then turns around to sell off. So kind of like this. Ooh, this is good here in Cliffs too. So this is going to be a tough entry. 2020 is going to be a high of the day. I'm looking at CLF first, but I might flip to here. Let's flip over this one. So 28 even is the high of the day. So we'll go a 20-cent stop down to 27.60. Did I do that math right? No, I did not. We will do a 27.90 down to a 27.65. It just hit that. I'm not ready to take this yet because I'm dorking up the math. 90 to 27.65. 25. I want to take that, but I want to chill out a second before I do. Okay, plenty of volume. It is chilling out. All right, I'm going to take it this time at 27.65. Yeah, we'll call it 27.60 since I didn't get the exact entry there. So 27.60, we're covering a 30-cent stop all the way up to 27.90. And again, this is short, basically just covering the high of the day in Lee Automotive. Again, that would be profit taking that's going on right now. That causes it to back up, but then we want to take it right back down. 30 cents is about 1%, so it need to hit about -8 from here. So, and it was just there earlier this morning. So now we go out and go, okay, got in at 27.60, so 27.30 is our next stop, then 27, and then 26.70 is our exit. So that's your numbers for Lee. You got to be patient, just sit there and let it cook, but have that upper stop in. Obviously, if it hits, it's 27.90 is where the actual stop is. If it hits that, we're out 1 hour, call it a Monday and be done with it. All right. Cliff, 2025, so 2005. It was doable to get in on this. You'd have had to taken some risks there at the beginning. There is some motion higher here out of the market. So it's not just turning around and rolling over like I thought it would here at the open. So that's holding up these shorts from working. But I do think once it gets to where it flips, then it's going to do that striping down that we expect to see. So we're in Lee Automotive. You can still take it here at 27.60. Again, cap it at 27.90 and go from there. All right, I'm going to check back on Lee. Of course, I'm going to leave, and then it's going to stripe down. So anyhow, starting to get some good activity out of Lee. All right, let's look around. Very few things are in the green. Wow, there's what, 6 holdings in the book. Clickstream, Gold, Bond, Fix is a bond holding. D's Dominion Energy. FMB is our big mutual fund municipal bond holding. Again, 2% tax free. It's better than money in the bank. Call me if you want to learn more. And then XLU is the utilities spider thing. So really hardly anything in the green here, and they all generally act against the market. So this is an everything sell-off kind of day. All right, what's down? MicroStrategy, again, that's a proxy for Bitcoin. So MicroStrategy is going to be down almost what Bitcoin is. So pretty big move down there. So we got AMC, that's a meme stock. Got some other marijuana related and psychedelic names up there, Palantir. So some of your big, DraftKings, BABA, Neo, BX down. There's no reason why BX would be down in a situation like this, right? They stand to benefit from a distressed market, but that's not the way the market sees it. And again, a lot of these are people just dumping big index funds, and it sells the baby goes out with the bathwater in that case, because it sells the good and bad. So anyhow, a lot of good names in here that are selling off pretty hard today, and then hardly anything to the green side. All right, let's check our trade. All right, our trade is in the green. Speaking of being in the green, it's up about half an hour. Units or whatever that is to you. Cliff would have failed. So if you had any entry in here, you'd been busted out of it. So we're in the right one. And again, entry at 27.60, looking for an exit all the way down at 26.70. So well off the screen. So we'll have to come back to this. Okay, let's talk about these circuit breakers in the market. I think these are really interesting. You may not, and I get that, but what's the history of these things? Well, I can't say I really remember it, even though I lived it, but I was a freshman engineering student at Iowa State when Black Monday happened, right? October 19th, 1987 is when it went down. I just turned 18. I had money in the market from, my, parents getting me into investing there in high school a little bit, not a ton, and not that I don't remember even thinking twice that day about, I wonder if I lost a bunch of money in my USA Cornerstone fund, right? I'm sure I did. But when you look at Black Monday, you're looking at 22.6% in one day. So out of Black Monday in 87, that's when the first stop went in, the first circuit breaker went in. And then they've been updated since. Strangely enough, they weren't updated during the global financial crisis, that 2007 to 2009 period, where you saw, over 50% total from peak to trough. It was 53% over the course of a year and a half. You didn't really see, any changes in the circuit breakers there, but we did. If you remember, 2010, May 6, 2010 was the flash crash, where the market dropped like 10% in a day. What was after that in 2013 when we got all these circuit breakers put in, and they worked pretty well. We saw it back in March of 2020. We were stopping out every morning, it seems. So the level 1 stop is at 7%. I've highlighted them here. So 7%, and basically it's the S&P 500. If that hits a down 7%, you're going to stop for 15 minutes. If same day it continues down to 13%, you're going to stop for another 15 minutes. The whole market. And everybody takes a deep breath and then it starts back up. If you hit 20% down in one day, the market's not only stops, but it stops trading for the remainder of that day. So you are literally done for the day. That never happened in March 2020. I can't remember. I think we hit the level two stop once, but we never hit the level 3. There are also, get this, it doesn't say it here, but they work in reverse too. If a market is screaming higher out of control, then it will pause for 15 minutes. You're like, well, why would it do that? It's like, well, the reason it's pausing is these are, several sigma outside of the norm of normal trading patterns. So if something's going on, driving an insane amount of money, be changing hands, they're probably that just means that there could be some computers taking over and executing algorithms. And basically that's all this is doing is it's breaking the automatic computer chain that's sitting there buying or selling, and gives at least the humans involved an opportunity to go either remove that computer / algorithm from doing what it's doing when trading starts back up, or at least maybe they do want to do that. I don't know, but at least it forces a 15-minute stop to assess things before everything starts back up. So I think it's a great idea. Individual stocks also have circuit breakers, and you see that a lot with IPOs. You'll see IPOs hit circuit breakers. I don't think they stop for 15. They stop, I think, for just like 3 minutes or something, and it starts back up. There's a 5-minute stop. There it is. Regulate individual securities within the current system if trading outside of these bands persists for 15 seconds. So it doesn't just hit it. It has to hit it and stay there because otherwise you could get knocked out. And then average pricing over the past 5 minutes and you're halted for 5, the max allowed pause is 10. Okay, I'll buy that. There's some, depending on what size, obviously the ranges are manipulated there. And again, it doesn't kick in at the open and it doesn't kick in within 15 minutes of the close, or it looks like within 25 minutes of the close. They obviously have expanded ranges because of the high volume at those times. So here you get into the history. There's 1987. There's your flash crash. People cry and moan about not being able to move their money, but overall, I think it's a healthy thing to just stop everything for 15 minutes with the whole market, if that's what's going on. All right, so that's what we've got for today. Let's check back on our trade. Basically, nothing to report. It's almost where we got it. So I'd still hold on to it. I think there's enough negativity in this name for us to meet our target, which is way down off the screen. So I'm going to hold it. Just realize, if you space your risks accordingly, it could just as easily come up here and lose the 1 R2. But again, we're trying to make 3 versus only risking the 1. And this little pattern here is a good one for things trying to go higher, can't, trying to go higher, can't, trying to go higher, can't, gets back to our entry and then could strike down from there. So anyhow, obviously if it hits one of our stops, I'll come back and finish that trade for y'all. With that, have a good day. Enjoy the big sell-off. Don't freak out, but pay attention to what's going on, and we'll talk to you tomorrow. Bye.